Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, and also let me know what you think of the new structure of the video where I first go over the bearish scenarios of the different time frames and then the bullish ones, starting with the medium time frame bearish scenario where we are looking for an impulse to the upside in a wave 1 or A, followed by a 3-wave corrective structure to the downside in a WXY. Now in this scenario, wave W is a zigzag to the downside, a 535, followed by wave X, which is then already finished in this scenario, being an expanding flat in an ABC. The minimum target for a wave X is the 382, which has been hit over here, and after seeing wave X hitting the 382, finishing the expanding flat, you now want to see a corrective structure to the downside, and we basically have three options. A WXY as it stands can be a sharp double zigzag where you can expect a zigzag to the downside in a wave Y, but looking more locally, that doesn't look too probable. In a wave Y you can also have an expanding flat, which is then a 3, 3 and a 5-wave move to the downside, and we can also look for a triangle in a wave Y, but it is way too early to call this a triangle. But what is very important is that this is the high of a wave X, and we're going to be looking for downside in a wave Y. If we then go to the low time frame, then this is the ABC expanding flat, which is the end of wave X. So we have ABC expanding flat, where wave C, an impulsive structure over here, ended in the most common target area for a wave C, which is between the two, 1.618, and this is then also the end of wave X in the bearish medium time frame scenario as just explained. However, for a zigzag to the downside in a bigger wave Y, you want to see 5-wave structures to the downside, but on the micro this looks very much like a 3-wave structure instead, and therefore there is the possibility to go up once more. Even though X is still finishing over here, we could go up once more for then an expanding flat, which is then a 3, 3 and then a 5-wave move to the downside. So keep your eyes pinned on the triple top over here as well at 30.4k, which is a very interesting level, because if price moves to the upside, I am probably looking, depending on how price is going to react here, for an impulsive structure to the downside for then a wave Y expanding flat ABC. If we go to the micro, you will see over here a 3-wave structure to the downside. So we have over here a WXY on the micro, WXY a 3-wave pattern, and I wrote over here impulse invalidated, and that has to do with this structure over here, because it looks very much like a very nice ABC to the downside, where wave C hit the 1-to-1, which is a common target for then a wave A, B and a wave C. We were first looking also for an impulse, where we were looking for a 1, 2, 3, 4, 5, but we never got that 5th wave to the downside, and now these highs have closed too high for this range to be a wave 4. Besides, this is also in time too long compared to this wave 2, so we cannot count this anymore as a 5-wave structure to the downside. Instead, if we are looking for more downside, we can count it as a WXY, where we then have a 3-wave structure in a W, 3-wave structure in a wave X, where all the fibs that you see on the chart are common targets for a wave X, the minimum one being the 382, which has already been hit, and then we're going to be looking for another move to the downside in a wave Y. And what is interesting about a wave Y is, first of all, it takes the double bottom that we have over here, as well as the lows likely over there, and in closely to the most common target area of a wave Y, taken from the high to the low of wave W to the current high of wave X, very close to the target area, we also have the high time frame range volume profile, which is the point of control. This red line is the point of control of the high time frame range volume profile that I sometimes show in my videos, and this is a very important support for then potentially a bounce to the upside. But don't forget the expanding flat scenario as explained, where we're then looking for potentially a 3, then a 3, take the triple top, and then an impulsive move to the downside. We don't need to go all the way down here. This can be a 3-wave structure by itself, but looking at this reaction at the moment, it looks a little bit weak for a 3-wave structure where you want to see 30.4k to grab the highs over there, because if this is the first structure, second structure, third structure, it looks like more like a wave X for another move down in this particular scenario. If you go back to the 12-hour time frame and we have a look at the bullish and then bearish scenario, then in this particular scenario, wave X is not yet finished. So we do have the same impulsive structure in a 1 or A, but now we are looking at this to be a W in a zigzag structure, wave X not yet finished. Interestingly, in this scenario, the first structure of wave X is an expanding flat. So over here we're looking for a 5-3-5, so there's 3 separate structures, and over here in wave X we're then looking for an expanding flat as a first structure. Then you have a second structure which can already be finished, as I will show you on the micro time frame as well, on the low time frame. And then over here a W expanding flat, an X being a zigzag or potentially a double zigzag, for then a Y to the upside. And because wave W over here and then W, X, Y, because wave W is an expanded flat, wave Y is not allowed to be an expanding flat. It has higher probabilities of being a zigzag or a triangle, where again the target for wave X, very interesting over here between these fibs as well, around the triple top is very interesting, and the fibs on the chart are taken from the low to the high of the expanding flat to the low that we have at the moment on the chart over here. So this could be a target for a wave Y in a W, X and then a Y close to that triple top, where, keeping an eye on the triple top, a swing failure pattern type of move can be interesting, where you take the liquidity close below for then a move to the downside, and the close below the liquidity is then a potential entry, stop loss above the high, and we're going to be looking for downside, where we are then going to be looking for wave Y to the downside. And we do have some interesting targets over here, support areas between 26.8k and 27.4k, and also more support over here between 26.2k and 26.5k. If we go to the low time frame of this particular scenario, you can see I have the W, X and Y on my chart. So over here, we then have an expanding flat ABC as a wave W. Then we are looking for X, and then we have Y to the upside. Now wave X can already be finished. Most commonly, wave X is a zigzag or family of the zigzag, being a zigzag ABC, which we have over here. So this could be the low of wave X, or you could have a double zigzag and then a zigzag one, they have a correction and another zigzag to the downside. Now as it stands, price over here is bouncing on the 886, which is taken from the low to the high of W. And that is important. It's not from these lows, it's from the low to the high of W, because that is the first structure that we're looking at. And the 886 is not a maximum target for wave X, but if it goes below the 886, we're going to be looking for these lows most likely to be taken. So in this scenario, if this is a zigzag structure and the low of X, we have some bullish CVD divergences, we would then be looking for a wave Y to the upside in a zigzag structure or a triangle most commonly, because you can't have a W flat X and another flat in Y. That's not allowed. Most common target area over here for wave Y being between the 1 and the 1.236, which is again very close to the triple top at 30.4k. A rare target for Y is the 1.618, and you can see that the triple top is in between the 1.236 and the 1.618, so it is a very interesting target indeed. If we then go to the micro bullish scenario, then over here you can see the W, the X and the Y that I've just spoken about on the low time frame scenario. And if this is the low of wave X, then preferably you're now going to see some sort of an impulsive structure to the upside in a wave A, followed by a wave B and then a wave C to the upside, and then an A, B, C. Now of course wave Y can also be a triangle, which is something that we have to keep in mind. Currently, if we look at this structure over here, it doesn't yet look too impulsive for a wave A, so potentially another low for X and then a double zigzag should definitely be taken into account. Now, if we go to the CVD divergences, these CVD divergences over here played out already as the high has been taken, which is very nice. We still have these CVD divergences over here, higher low on price, lower low on the CVD, where the target is the high over here at 30k. However, this low over here came down on a high amount of volume, which therefore gives a little bit less probabilities of this particular CVD divergence playing out. And if we then finally go to the probabilities, then on the medium time frame, I am looking for more downside overall. So the bearish, or both of these scenarios really, are bearish, looking for a bit more downside. where this scenario over here is the first one for an X, and then you want to see Y to the downside. However, I think this particular scenario at the moment has a little bit less probabilities because of what we see locally, which isn't an impulse but a 3-wave over here. Of course, we could take the low, but then I'd be looking for something like this, right? And if we go to the bullish and bearish scenario, then this is the first, second, third structure, which also leads to more upside. So basically overall on the medium time frame, what I would like to see is eventually these highs taken, either going down once more in a structure like this, or have a structure like this over here, where we have the first structure, second structure, third structure, right? Where we are again taking that triple top. That's definitely something I am looking for. On the low time frame, I'm actually pretty neutral because the low time frame over here is a finished structure already. And if we go to the bullish scenario, then we are looking for the WXY. And the WXY is very interesting in my opinion, where again we are looking for the triple top, which is definitely something I'm looking for. But more interesting, however, for me is the micro, where potentially at the moment might be a little bit like slightly bearish potentially. It kind of depends really on what is happening, of course, on the micro time frame, because if price keeps pushing on high volume, well, you know, it doesn't make sense to call this a wave X, as we are then looking for higher prices. But if we look at the structure that we have at the moment on the micro time frame, it looks very sideways and not too impulsive yet. And that is also what I wrote in the target box over here. It doesn't really look from this low like a great impulsive structure for a wave A just yet. Of course, it can, you know, time will tell us what happens, but at the moment it looks very like more corrective than that it looks impulsive, where that's like why I wrote slightly bearish for then maybe another low first before then a return to the upside. But we of course observe what is going to happen more locally, because the structure doesn't look too impulsive just yet, and we do have bullish CVD divergences. And as long as price is moving to the upside, we see some volume increasing as well, we have to at least consider the opportunity for price to continue pushing to the upside, and then it can still evolve in this being a 1, 2 for then eventually a 3, 4, 5 or some sort of a diagonal in a wave A. But we have to wait and see. If we look at the lower time frames for a 1, 2 and then a 3, then preferably if this is a 1, 2, 1, 2, you can see the second one didn't take the high of the first wave 1, which is quite uncommon. Usually you have a 1, 2, 1, 2, 1, 2, where each wave 1 takes the high of the previous wave 1, but that isn't the case over here. So I'm actually very neutral as well on the micro. I wouldn't really say maybe slightly bearish. It's just, it really depends on how price is going to react here. We are going towards resistance levels over here. Time naked point of control at 29,475. The daily at 29.7k, which is also an important level to keep your eye on. So of course, it's maybe not what you want to hear, that I'm neutral over here and neutral on the micro, but it would be good to have a bit more information. It's just that at the moment it doesn't look too impulsive, which therefore gives me a bit of a slight, you know, I'm struggling with this one, but it doesn't look too impulsive just yet. And I hope that gives you the information that you're looking for. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.